All right. Good morning, everybody. Sorry, I was just looking through one of the meetings settings. TGIF, right? We made it. Today's morning briefing is called the full Ginsburg because it's something I'm going to be looking for this weekend. It's an old phrase. It's been around for a long time. I'm certainly not the one that created it. It's this roundhouse of hitting all of the Sunday talk shows. There's like 5 major talk shows. It's done when somebody's got a message they want to get out and they're putting it into every space. Everybody on the left, everybody on the right, and then in the middle, which covers all 5 groups. If you look at Finance Juice this morning, you can see we got a lot of Fed speakers on deck. Darn it. Mostly ECB officials, but we do have 2 US officials, Barkin and Waller. But what we want to hear is a consistent message, right? We want a dominant theme. And if you were listening to Bloomberg a little bit this morning, they had actually brought in an old Fed official, and he was kind of talking smack on the current officials. This lack of message is what I expect to see addressed. So every time we have Fed officials coming out talking, we know that they're trying to stand for themselves, right? To keep a name in their own space as if they have a thought that actually belongs to them instead of a thought that was given to them. But they all do still need to sing out of the same hymn book. So it makes it a little difficult for them to break away from the pack. Right now, their message is muddy and mixed, and I think they need to clean it up a little bit. So I'm thinking they're going to do a little bit of that over the weekend, and it might change things by Monday or Tuesday, excuse me, because it's a holiday on Monday. So something to consider. We want to look for a cleaned up message. And at the moment, that potential is on Sunday. Yeah, they were talking to this guy this morning, Lawrence Summers. So we want to see that message cleaned up. Very likely they're going to start working on it this Sunday. And, we'll just take it from there. We do have Christine Lagarde speaking at 1 o'clock this afternoon. You can see that it's a fireside chat at the G30 dinner. So it's not like she's giving policy statements, and very likely this isn't going to be anything impactful other than there's always the threat or the implication that maybe they screw up and say something inadvertently that they didn't mean to say. She's really good at not doing that, but yeah, it can happen. So we always want to be prepared when we have an official speaking, just from the potential that they could screw the hell up and chew on their own shoelaces. This one, I believe, is going to be more important. It's Barkin, and he's going to be speaking about inflation. So, his thoughts and opinions depends on what he has to say, right? So 9 a.m. and 1 is going to be the 2 that hold a lot of weight. Otherwise, economically, if we're looking at, what's on the agenda for today, once we get past 10 o'clock, we're pretty much good to go. That rig count, yeah, I worked on those rigs for most of my life, and the rig count really doesn't change that much. Adobe is front and center this morning, but there was also analyst rate changes for a lot of the different chips this morning. So it's something to keep your eye on. I've seen Intel, Adobe, AMD, a couple others. So chips, again, are front and center. It's got some Amazon news on mergers and acquisitions. All right. So I try to show this screen every morning. One of the reasons that I show this screen every morning is because if you're trying to go back in the past and look at a particular day as an RTH, as an intraday trader, it's hard to just look at the price action alone and have a really good idea of what the heck was going on, right? They say that one of the best things that you can do as a trader to improve on how you're doing as a trader and to get better at day trading is to go back and review the charts. But if I just go back and look at any one random day, what was going on that day? Why did it break out here? Why did it fail to break out earlier? The kind of economic material that was happening that day will affect how the price moved that day. So if I'm trying to evaluate old price action and I'm looking at things like breakouts or breakdowns and then wondering, would it have worked? Is this something that is repeatable to perhaps develop into a trade strategy? I still need to know what was going on that day. Now you can hunt over the web and try to find the different economic pieces for that day, the 12th, which is the one I just randomly picked. Or you can turn on the morning briefing for that day and fast forward to the point where I show this page. I've got, more than a year's worth in there, a couple of years at this point. And so I've got it covered just about any day. There's randomly, maybe we missed a day here and there, or it didn't get recorded or it didn't get uploaded, but for the most part, they're almost all there. So it's something to think about. Volume's a little light this morning. That's saying it mildly. Wait a minute, I'm on the wrong one. Let's get out of that. That's my ratio chart. That's better. Strong and steady volume all through the night, sitting at around 116. If we look at where we've been on the week, we're really not out of line here. 116, yesterday was 100. The day before, which is the FOMC day on Wednesday, we were at around 80. These are normal levels, nothing to be too concerned about. And we have a market maker move this morning, adding it about 0.5%. So if we take the $20 from the market maker move and the $50 of the average daily range, then we're still looking at a pretty narrow day that doesn't even hit a $100 move. To even get that kind of move, we really got to get outside of yesterday's price action for an upside push. Somebody asked me yesterday, who's buying at these heights? I get it, right? It seems like a good question. But there's a lot of firms that don't get to choose, right? They have to buy. CTAs and things like that, those volatility control funds, the VC funds, they don't get to pick and choose when to buy. They have to when the triggers are met. And those triggers could be when volatility reaches a certain level. in this case, when volatility goes down low enough that the VC funds have to buy, or it could just be when the CTAs are told, okay, this is your next entry point. It doesn't matter if it's at the high. It doesn't matter if it's been ripping nonstop for the last 8 days. If the metrics are met, they have to buy. So who's buying up here? The machines are. The machines don't care. We have an MDP this morning. That's a missed daily pivot. The idea behind this is that price generally hits its pivot point about 80% of the time. So when it doesn't hit its pivot point, it's something that's different. It stands out. We're in the 20th percentile. So we want to keep our eye on this. If we do break that Globex low, we are very likely going to come down and tag that. To get there, however, the Globex low is also a voodoo line, which is not a surprise. It's probably why it's the low, right? Price was headed to the downside, hit the voodoo line, and stopped falling. So we'll have to get through that voodoo line to get to the next one, which is 44.50, which happens to also line up with volatility, options, gamma metrics. So that's a really big level. And then we would get to the daily pivot point. If we break our own Globex low, 44.50 is destined, right? Not guaranteed. Destiny is all. Isn't that the phrase? So not guaranteed, but destined. That'd be my short target. The daily pivot point isn't support or resistance. So just because we would get there has no bearing or issue on whether or not we would turn there. Below that, we've got the ADR half at 44.45. And then we've got a much greater voodoo line at 44.33 or 44.32, right around in there, 44.35. We know it's a greater voodoo line because it's a darker, thicker line than this green one, right? Both of those are voodoo lines. Hey, I'm not the one that named it, right? I probably would have came up with something a little fancier, but I don't know. Voodoo sounds ominous. I think the name fits really because we don't know what the heck the lines are based on. I know that they take manual input though, because you have to download the indicator from their website occasionally, like once a quarter, right? Especially if we've been moving a lot farther. Let's see, what else we got? $10-day, 30-minute volume profile. When we're at the lows, we expect to go to the highs. When we're at the highs, we expect to go to the lows. We're going to lose this last leg down here, which will bring our bottom up to 4,300. With the 4,300 and 4,500, because I'm just rounding up a little bit up here. That's a 200-point range, really clean. We would consider this almost a B shape. It would have been more of that, but we started to get this tail up here, right? So a lot of volume in this zone. Very likely, if we make a break through our own Globex low, we're going to get tangled up in this, and we would not get back to the point of control. It would take something really extreme for that to happen, right? This is an air pocket, but as we've talked about quite a bit recently, there's some defense down there, like a pivot point. Whatever it is that is turning the market, it's not the ES hitting something. It's a correlated market that is affecting the ES that's hitting something. It is worth noting that 4450 area has a lot of volume there in relation to how much time we've spent there. So might get a first touch play back in that area. I would just mark the whole thing out as a zone. From the top of that doji, at the very least, to the bottom of it. Yeah, I think that's a pretty fair. That's a little too low, but you could use the close of that doji, right? So let's just kind of lay some levels out, see what it looks like. Come on. $44.57, $44.43, and then $44.29. It's a little bit on the low side. But it gives us our zone. Yeah, I would say we want to just go ahead and use the doji's candle close, right? Not the body of. So 44.60 to 44.40. Nice 20-point range. All right, another night where we don't have a VPOC. We haven't had one for quite a while now. $43.70, we've got a monthly level down there. It's worth keeping your eye on. If we do start breaking to the downside, and then we get an inside day breakout from yesterday's low, that'll be the target on that downside push. There's really no expectation that we get such a drastic breakdown, right? The broader market breadth is still very strong. So really no expectation that we're going to break down. At the very least, we're likely to pause and or stall, not break down, right? All right. How far away we are from the 10-day? We're 1.8%. We've started to roll over a little bit. So what we want to see now that we've rolled over is that it works its way down. It doesn't have to get all the way to zero, but that's generally the way it goes, right? We roll over and we work our way back towards that 0 line. The orange and red bars are choppy and kind of nasty, and if you look past them, there is this blue line. That blue line hasn't started to roll over just yet, but it's what we're going to want to be looking for. It's the idea that price has ran far enough away from the 10 that it's likely to pause now and stall. That still doesn't imply a short, right? It's an inappropriate risk reward right now to try to sell calls or to buy puts, unless you're buying something really cheap, just because of how far we've moved, right? So from a day-to-day perspective, we're still not overextended. So it doesn't have to pause yet. We could have another breakout day again today with another expansion beyond this high from August of last year. And we could drive price more than 2% away from the 10-day. Then we could have that conversation of moving too far, too fast. That is the daily though. So take a look at it on the weekly. We are getting a little bit extended. We could start to use that phrase overbought when it comes to the weekly, right? We are overbought. We have moved far enough, fast enough that we're starting to get to this point where price is going to want to revert back towards the 10. It's interesting yesterday how many people asked why the VIX was going up with the S&P going up. It's a good question, by the way. I mean, it's absolutely something to be considering. But if you think about what the VIX is, and I've kind of made it my mission in life to take complex things and just make them simple, right? So what I'm about to say might not be textbook perfectly accurate, but it sure makes things easier to understand. The VIX is just volume of the S&P SPX options. That's it. Now, technically, it's more complicated than that. But at the end of the day, it doesn't have to be more complicated than that. So if the VIX is nothing more than volume, and that volume can be buying volume or selling volume. Normally, people are late to the game. They don't buy insurance until it's too late. They don't buy puts to try to protect themselves until the market's already falling. But sometimes, every once in a while, the market actually gets skittish enough that it starts buying puts before we fall. That's it. That we start running so far, so fast, that everybody begins to say, this is getting a little ridiculous. It's getting a little unrealistic. It's got to go down at this point, and they start buying puts. And because they're buying puts, the VIX goes up. That's it. We generally see that happen when we get too far away from the 10-week, interestingly enough. When I was newer and I didn't quite understand that, right? It was, how come I keep seeing the VIX elevated when the S&P would get too far away from the 10-week? Well, it makes sense. People are starting to get a little nervous about how far and how fast we've gone and start to feel that it's inevitable that we're going to go down. The funny thing is, the market's wrong as a general group more than it's right. So if the herd is all out there buying puts, very likely those puts won't monetize. It's whatever the market makers are doing, right? That's the one that's going to stick. All right, the dollar took a pretty good beat down yesterday. It's down to 102. It's still not getting into this extreme zone, right? So not a big deal at 102. As long as it's holding above 100, we're good to go. And even below that, there's a little bit more structure around 98, 99. We had stocks and bonds make that move yesterday. And this morning, they're not exactly lockstep, but they're both still sitting in the upper portion of that run. Right, we're above 50% on the bonds, and we're above 50% of yesterday's move in the S&P, which we just kind of lump and say stocks and bonds. So keep your eye on these two, see if they decouple. If they do, really keep your eye on what's going on with the Dixie and the 10-year. The 10-year is at the bottom of this range and ready to break down. So, you know, we kind of got that channel on the 10-year. And as long as we're maintaining inside of that channel, then we got to have an expectation that the bonds are going to stay in their channel too. The NASDAQ's looking a little perkier than the S&P this morning. There's a very strong voodoo line at 15,419. That's what they call their snow line. And other than that, we just got to get through yesterday's high for an inside day breakout. I put that homemade Fang list into our quotes list. So now we've got them all in there together. We can see how the Fangs are doing in the morning. They're up 0.5% collectively. So if we were thinking of the NY Fang as a group, which that symbol during the day is great, but it doesn't work in the pre-market, which is why we had to make this, right? Gold's doing good. Kind of sort these things here. All right, the K-Web plays, that's JD, Baba, Baidu, PDD. They're all doing good with K-Web up more than 1%. Semiconductors are still doing good, which we talked about. There was some analyst revisions and I was about to say a merger and acquisition, but no, that's not right. It was Amazon that had that news. I could have swore there was something with NVIDIA this morning that had news again. And then of course, Adobe's got earnings. Bitcoin's basically flat, energy too, and emerging markets. So with that one, with EEM being down and KWeb, kind of want to follow up with KWeb being up, one of those two has to change, right? Or you got to kind of ask which name in KWeb is doing good. Because if emerging markets is down, but KWeb is up, it kind of implies that it's more nuanced than that, and that it's a particular name driving it higher. It's certainly topping out this morning. So if it's not KWeb, let's try JD. Oh yeah, JD's a runaway. It's a juggernaut. PDD Yeah, not so much. All right, so Baidu's basically lost, dazed, and confused. Baba had a nice rip, but has started to give it back. PDD really didn't even make it outside of yesterday's range. But JD is very likely the reason for KWeb being up and for the others to be getting such attention. So I'd be keeping my eye on this if you're playing in the China ADRs. We already had a significant gap up with a close at 30, call it 40 flat, right? 39.96, that's close enough to 40. So that was yesterday's close. Now we're up again this morning to 40.68, 40.69 area. Now this thing has got a habit and a history of gapping. So, you know, if you look back, there are gaps everywhere. I would be mindful of the gap up and the drop down, right? Like that 1, 2, 3 punch right there. So a good short would be seeing the open, maybe watching this get a little bit higher to a round number like 4,100 or, you know, 41 flat. And then your rejection begins. Trigger would be starting below the open. And an entry could begin as soon as we get back inside of yesterday's price. So a drop below 40. This thing can move, right? So I wouldn't try to short it just because. I would wait for it to actually give you a short signal. We got to go back for a moment. A little unfinished business here. So we're back to the ES. We're back on that daily chart. We're outside of that box, right? And I had mentioned earlier in the week that we close inside of this box 80% of the time, which is above the statistical average. But that doesn't mean we always have to close inside of the box, right? It does happen where we close outside. The thing is, there's actually there's a history of like a volatility loop. And what happens is if we expand too far away from that box, they'll actually buy into buying, trying to get back to delta neutral. And the more they buy to get themselves back to delta neutral, the more the price drives higher. And of course, that gets them out of their neutral stance, and they have to buy more to get back to delta neutral. And the more they buy, the more the market rips. And it can go that way to the upside or the downside. In late 2018, we got caught in one of those. Now, thankfully, it ends at the end of the week, right? But it can get out of control. You know, human nature, we can over exaggerate the next time and then the next time. So when we get these breakouts, if it's one standard deviation breakout, it's not that bad. If we start to expand beyond a one standard deviation breakout, it can really start to get out of control, and the expansion can looking like a 3.5 standard deviation move. So to kind of take the nerd version of this, it's very unlikely that a breakout above this high from Wednesday is going to stick, right? Or is that's Thursday, excuse me. If we get above it, it's very likely that we're going to wick above it and then come back in again. And it would not surprise if we can get back to that 4,400 today, or even just close to it, right? But don't short it just because. Let it actually prove it. Otherwise, the more people try to short this and then get squeezed and then pop and have to buy back their short, the more this thing can go. And add to that, the funds having to get back to delta zero, they'll buy into buying if it gets just a little bit more. If you are looking for a solid short, not just in this, but like in general, you're going to want to get below that 50% level for a good short. And that's 44, call it 44.40. At the very least, shorting from the high is your lowest risk entry. Risk and reward is tied together. So shorting from the high without any signal or reason, not waiting for confirmation, just shorting it, is the least risky thing that you can do. But the reason it's the least risky is because it will lose more often than anything else, right? Everything's tied together. You want the lowest amount of risk, you're going to lose more often. But trading isn't about how many times you win or lose, right? That's baseball and sports. This is just about making money. And trying to short that high with no confirmation whatsoever will risk less money than any of the other trades that we could talk about. If we do get a breakdown below the Globex, be aware that we could just be expanding the megaphone, right? Just a little bit more and a little bit more. So a breakdown of that area, you'd want a 236. If we get beyond that, then you could consider a short in play, but that brings us back into that 44.50 kind of zone. Yeah, that was a little sloppy. Kind of clean it up. There we go. 44.50 again, right? So even with the measured move, we would still need below that before you could consider a good short with confirmation, right? But that confirmation, like I was just talking about, isn't it isn't the solution to things, right? Even a confirmation trade can still fail. So we got K-Web, gold, semiconductors. Those are all doing fine. And then on the other side, really just the VIX, right? We don't have anything at a 0.5% or more that would meet our restrictions or our guidelines. All right, Apple and Microsoft are both pressing against the high of the zone that they built yesterday. Tesla, on the other hand, is still holding back from the high of the week. All right, so it's got a little bit of room to run if we're thinking about the week's range and just getting back to the top of the range. On the other hand, we are basically in the middle of the week's range. So if Tesla does start heading to the downside today, getting back to the low of the week is not out of line. So you got the high of the week or the low of the week. either one would be a valid play. All we have to do is get an inside day breakout of yesterday for a move to the upside and break our own Globex low for a move to the downside. It's a 7-point move down here and 6 or so up there. That's not bad. Kind of either way, right? So we just got to get out of this spot right there in the middle. It is interesting to note how much Tesla's already recovered this morning. That's not enough, but it's a good start. The news with Amazon doesn't really seem to have affected it very much. Kind of sitting in the same situation as we are with Tesla. We've got our week high, we've got our week's low, and we're not at either one of those. So inside day breakout above yesterday's high should give us a chance to get to that 129. And breaking our own Globex low could offer a short to at least yesterday's low. And if things start to pick up speed, then to the low of the week. It's not bad. So with these Bitcoin names down, BITO, that should provide a little bit for Riot. Yeah, weakness there. And then Mara coin. We just don't have any real good signal there. All right, so coin's looking a little different. Inside day breakout already, nice expansion in the pre-market. It's got more room to fall if we are looking for this, to kind of give it up and dump back down again. All right, NVIDIA is 3rd time's a charm. Pressing on that 433 this morning. We kind of take it out to the daily. You got this breakout of the range. And so far it needs to prove it. Now, when it comes to a range like that, you can just measure the range. And we can see it's already made the 1, 2, 3, 6. Above that, we've got 445, call it 446 is close enough. That'd be 50% of this measured range. The thing is, that's a really big expansion from the 14th. So you're not going to want to try to short this thing until you've got a reason to, unless you're just trying to take the cheap isn't the right word, the lowest risk trade that you can take, right? It goes back to what we were talking about earlier. It'll be the lowest risk, not the one that has the highest probability of working for you. If we do get weak, it needs to hold above the 50% mark for this weakness not to turn into a short. So 417.76, kind of a line in the sand. It's a long ways down. 430 is a really big level. Should be support. The idea would be we're kind of gapped up. Maybe we fade back, find that 430 as support, and then springboard off of it. But for the week, you got to kind of really assume that this is done, right? And not just this, but everything. It's been a big week. If we consider it from the idea that this and everything else is done, all the market has to do today is hold the line. That's it. It just has to hold the line. Doesn't have to do anything else. So the caution here, the drum beat is don't short this market with size and a lot of money at stake. Only based on the idea that you think we've gone a long way and that we should go down now, so you're going to short it. Because that's a bad idea. All right, I see a lot of chips. And then the China ADRs and the monsters of tech. That's the dominant thing moving this morning. So keep your eye on finance. We've had this diversion between these two, and we need them in sync. We get better rallies when they're in sync, right? Like yesterday, they were both working in concert together. It wasn't perfect, but at least they weren't inverse, right? So here in blue, we got NY Fang, and the regular chart is KRE. So between these two, what we've seen recently is that we'll have like no finance, but we'll have the fangs, or we'll have the finance, but we won't have the fangs. Yesterday, with that awesome expansion that we had, these two were working in concert the way that they're supposed to. So for today, if we want to see that expansion continue, we want both of these working together. And so far, all we're seeing is tech, not really seeing any finance. So the market could start out kind of choppy, a little sloppy, maybe not have a whole lot of push to it. But if finance comes in, then we could really start to rip. And I'll leave you guys with this. It's the rug pull play, right? So there's always two sides of the fence. We could run up and test this high and drop back down and just have our zone for the day. I really believe this is the most likely thing, right? That we're just going to hold this range and maybe expand a little bit on each side today, but that we really just hold the line, go into the weekend. But if we do get above yesterday's high, check those financials and look to see if we're starting to get momentum behind the market breadth. It's that rising tide lifts all boats scenario, right? Because at this point, having this much overextended market already, I don't think the FANGs can do it today by themselves. I really don't. I think we'll just get up there and we'll fail to really get any follow through unless we have breadth from the rest of the market. I think it's going to be one of those kind of days. But if we do start to expand beyond that, we could easily have another big day today. Mostly predicated on the idea that if we start to have a big day like that, everybody who tried to short at the end of the day yesterday are off sides. And that can add to the buying, which adds to the buying that we already have, which gives us an even stronger push to the upside. And that we could easily get past 4,500 and into that cog line at 4,511. Everybody, have a good day. Enjoy your weekend. Long weekend, no less. Tuesday might be a morning briefing, it might not. I'll try to post as soon as I know. But otherwise, should be back good to go by Wednesday. Take care, everybody.